In today's video, we will talk about dividend stocks. What are dividend stocks? That's a great question that many people who are new to the stock market are asking. There are a lot of intermediate level videos out there, and they make the assumption that you are knowledgeable about what dividends are. If you are completely new to the stock market, we will be explaining the basics of dividends and dividend stocks very clearly, as if you were starting from scratch. This way, you can apply this to your portfolio, your investment activity, and the stock market. Let's start by saying that when you buy stocks, you are buying a small portion of the company. When you buy one share of Microsoft, you are technically both an investor and an owner. This is a fact since buying stock in the company is a representation of ownership. This is important and it will tie in later if that company is making a ton of money. If they don't need the money for operational purposes, they'll be like, we all have this money that we don't need at all. Let's reward our shareholders and stockholders. Let's give them cash in the form of a dividend. That's what a dividend is. And basically, the company is sending money to your account just because you own stock in it. They are rewarding you as a shareholder because you own a small portion of that company by giving you cash through dividends. Companies will have varying amounts of stock. Some will have 1 million shares, while others will have 1 billion. It all depends on the company. We will give you an example. Let's say a company has 1 million shares of stock, and they want to give $1 million. Just do the simple math. You will receive $1 in cash if you own one share of that company's stock because $1 million divided by 1 million shares of stock equals $1 per share. If you own 5 shares of that company's stock, they will send $5 in cash to your investment account, and it's going to appear in your cash balance. That's what dividends do. You need to know that not all companies pay a dividend. It is up to the company. And that is why when someone says it's a dividend stock, it just means that the company is paying a dividend there. There are 3 key important dates that you need to know: the declaration date, the ex-dividend date, and lastly, the payment dates. The declaration date is the day the company makes an announcement that they will be giving out dividends. As simple as that. The ex-dividend date is the day you need to be in the stock market and buy that stock. But put it on hold before the dates in order for you to qualify and receive the dividends. If you buy the stock on the ex-dividend date, you will be disqualified from receiving that dividend because it's too late. Take note of this information because it is very important. The payment date is the day you will receive the cash in your brokerage account. In order for the company to declare dividends, you have to buy that stock and hold it before the ex-dividend dates. Then you will get paid. Those are the key dates that you need to remember. You are going to get taxed on your dividends because that dividend is considered taxable income, even if you reinvest it or if you leave that money in your brokerage account. In other words, if you don't withdraw it back to your bank account, in either scenario you are still going to get taxed. The amount of taxes you will pay depends on whether they are ordinary dividends or qualified dividends. Ordinary dividends will be taxed at the normal rate, while qualified dividends will be taxed better because they meet the requirements to be qualified. This will depend on the company and where the dividends are coming from. Things that are out of your control depend on whether you kept your stock on hold for more than 60 days before the ex-dividend date, which is called your holding period. When you look up a stock that pays a dividend, you will see in the stock summary that it's going to yield. Yield simply refers to the rate at which a stock pays a dividend. The yield helps you picture the rates of how much you are earning. We will give you an example. If the stocks say that they want to yield around 4%, it means that if you put $100 worth of stocks on hold for a year, you would receive $4 worth of dividends because the yield is 4%. Just think about it like a savings account. because if you put $100 in a savings account with a 4% yield, you would receive $4 in interest income. It's the same concept as the dividend yield. This is the easiest way to conceptualize it. A good question that you should be asking is, should you try to buy dividend stocks with the highest yield? We will be giving you another example as a way to easily explain it. A company has given us some dividend-paying stock, and the yields are around 20%. Here's what we are thinking at the moment. If you see a dividend stock with yields of 20, 25, or 30%, we are seeing a red flag. It's not because it is a scam or anything. It is just unsustainable in most situations, and it sounds too good to be true. Usually, when the dividend yield is like 20%, it's pretty temporary, and it will be reduced substantially. They will just cut it to zero or remove it, since it is often a signal that something went wrong with the company. So if you see a 20% dip, you will have to be careful at all times. Another question that needs to be asked is, how often do companies pay dividends? It depends on the company itself. Most dividends are paid quarterly. They are going to pay dividends every 3 months, almost similar to a regular schedule. It's very predictable. Other stocks, such as real estate investment trusts, pay dividends on a monthly basis. Some dividend-paying stocks will pay a dividend annually. Other stocks will pay a discretionary dividend whenever they feel like it. It is solely the choice of the company. Are dividend stocks the best type of stocks? Well, not necessarily. It depends on our investing goals. If you are going for maximum gains, dividend stocks, which are usually mature stocks, are going to offer you less risk and less reward. In that situation, if you are just trying to maximize growth and have a very long investment horizon while trying to maximize growth, you should not go overly heavy on dividend stocks, since it will depend on your situation. If you are trying to go for more stable and profitable companies, then dividend-paying stocks might be a great fit for you. If you are new to this channel, please think about subscribing so you can watch our budgeting and personal finance tutorials. Thank you so much for watching, and we will see you on our next video. Bye for now.